Yo, YouTube. Man, what's going on? We back. I am back, man. Oh, it's been a long week. We went live a few days ago, but I'm back now. Friday, finally had an off day. Friday, Saturday is my normal off days from work, so let's take advantage of these days off. We need to get in the charts, like I said last video. Man, we got slapped around in the markets. And it is what it is, and it happens. you know. So just trying to be consistent. We're gonna trade. We're gonna look for trades. Remember, use the monthly time frame for direction. We use our daily time frame for high and low prices, and we use the 1 hour time frame as our entry in buy zone, sell zone. So we buy high, or we buy low in the buy zone, and we sell high in the sell zone. So we separate the 1 hour time frame into buy zone and sell zones, looking for known levels of U-turn. So, man, let's get started. I'm finna go over these. I got 5 new charts. We're finna go ahead and break these down so we can try to get all of the pound pairs done, and then we need to get another euro pair done, and then do the rest of the USD pairs. So this GBP JPY, been waiting on this. Been waiting to go through this one for a while, but haven't been able to have the time. So now here we are. Well, let's get straight into it. Again, monthly time frame is for direction. Daily time frame, high and low prices. 1 hour time frames is our buy and sell zones. So let's get into it. British pound, Japanese yen. Monthly time frame is for direction. Monthly time frame, monthly time frame for direction. All right. So as a trader, we have to ask ourselves, does the market move randomly or does the market move symmetrical, or does the market just move randomly? So it is our job as traders to find known levels of U-turn. And we use we find known levels of U-turn by using trend lines and Fibonacci's and support and resistance. So that is what we're going to do in order to find our direction on the monthly time frame. So, and what we do is we come in the current price point and we just go back to the lowest point, to the major low, or when the market U-turn. And then we ask ourselves, okay, so why did the market make a U-turn here? Why the market come this low and then just go up as it's been doing the last couple of months? So we start our trend line here and we draw it back and we just look for known levels of U-turn. When we look to get the touches, we're not trying to force fit it, or we just see where we get the touches at. I mean, it looks pretty good to me. And we got U-turn, U-turn, U-turn. And we got support. We got resistance. Looks like a false breakout. But the market been holding at that price point, right? But maybe it could be this. I mean, that's also a U-turn level too. I mean, you got U-turn here, U-turn, U-turn. Then we got U-turn there. So this is what been keeping the market up. Or I said this. Well, I missed that one up. Let's try it again. Why did the market make a low here? We got U-turns, U-turns, U-turns. Let's just say we use this one, use this angle, right? Then you got another angle down here. So it looked like horizontal. We got horizontal support, and we had horizontal support, and horizontal resistance. So you see you had a low here. So we got U-turn there, U-turn here, and we had a U-turn there. Now we broke up above what used to be resistance and it held as support. Resistance, U-turn, 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 U-turn. So safe to say that that is a good U-turn level. So now the market has got above this angle. We got above this horizontal support, resistance, tested the backside support. Now the market just been taking off for the last year or so. So, all right, so we can just gauge this by bringing in the Fibonacci from the lowest point. We got 1, 2 candlesticks to the left, 1, 2 candlesticks to the right. That's higher than center wick low. And then we need to find a proper high. 1, 2 candlesticks to the left, 1, 2 candlesticks to the right. We bring in Fibonacci, so that's a proper low. And there's a proper high. Market gave a 5-0 retracement, and it hit that 618 extension. Hit that extension at this in May of 2021. Then the market fell down. So we bring our Fibonacci's from this low to that low. For this low to that high. And you can see we just stayed at the 236 retracement. Market never came below it because that is a known level of U-turn. Broke it, broke resistance, came down to support, and then the market took off. And you see we had hit our 618 in October of last year. So now we got 2 candlesticks to the left, lower than center wick high. So that's our proper high. And then our lowest point retracement right here, we bring that Fibonacci here, and we're gonna go up to this high. So right now we had a 618 retracement. Looking for the market to go up here. Looking for this market to go up to that 186,786 price point. So 186.768 price point. Right now, see the market taking off to it. So we can get rid of all of these Fibonacci's. These are no more good. Those have been done. So we see we got this market making higher highs and higher lows. We broke, we broke resistance, tested the backside of support, and the market's taking off. We got an up Fibonacci 186,786 price point. That market is currently 400, about about 500 pips of current price point. So we got 500 pips of opportunity in a direction. Safe to say our direction is bullish. So looking like we're going up. And then we can bring in that other known U-turn level. Why did the market make a low here? Bring the trend line backwards. You see how we got U-turn, 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 U-turn. Then we bring this one up. Or it could be this, which is still a good U-turn level monthly time frame. Not necessarily worried about candlestick wicks. We just we don't want our trend lines going through the actual candlestick itself. So and you can see even here you got U-turn, 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 market U-turn, support. So direction, it's safe to say direction in this market is up. We're 500 pips away from hitting that monthly target. And let's see if we can find a top. So we finding support, right? When this market moving up. And let's see if we can find support. We know we got a Fibonacci extension here from this low to that high, going to this price point. So we'll keep that up. Well, let's see. Okay, so why did the market just make a high here? Which we know why, because it hit the 618 extension. But then let's draw it back. and see if we have a level of resistance going up. Bingo. So if you can see through, okay, so we know it's that low to that high. Let me actually get rid of this Fibonacci so we can actually see, all right? See how you had market came made a high. We know that the market reversed because of we hitting the known level of U-turn. We hit that 618 extension. So as you can see, looks like we got a symmetrical angle of we got an up channel. We got resistance, market comes up, resistance fall down to the bottom support in this channel. So the direction is up, and it looks like we might be breaking this channel. So that's even more so sign to say, yep, we're gonna buy this market. So let's bring that Fibonacci back. And yeah, that was this low to this high. All right. So direction is up. So let's type it out. Tell ourselves what are we doing? Monthly time frame. So monthly time frame is in a up channel, looking to buy this market on its way north to the 618 extension. All right. So we came to the monthly time frame, used our monthly time frame for direction. We came in, we asked ourselves, why did we make lows here? We drew our trend lines back, and we see in the past we have we had consolidation, sideways resistance, horizontal support. We had U-turns, we had support at the bottom, and then we had resistance at the top. We had U-turn here, U-turn there, U-turn. Market just never broke above it. Then it actually broke above here. So now, but then we have this angle where we got resistance, 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 resistance. Now the market is breaking above what was resistance in this channel going up to the 618. So direction is up. So we're looking to buy this market. So now we take this information and we go to the daily time frame. We use the daily time frame for high prices and low prices, but we're still going to use the same setup that we used on the monthly time frame to find direction. We need to use the same strategies on the daily time frame to find out exactly where the high prices and the low prices are. So according to the daily time frame, the right now current price point is too high. Remember, we buy low and we sell high. We buy low prices and we sell high prices. So we're looking to buy this market, and the market would be too high right now. So we're not looking to chase it. We need to find known levels of U-turn, and we find known levels of U-turn by bringing in trend lines and using support and resistance to find those angles where the market is U-turning at. So that's his current price point. Market then taking off. So we just come back down to the most recent major low and ask ourselves, okay, so why did the market make a low here? And we bring it back. Bring in more information, waiting for the market to update so we can get the more candlesticks. All right, so why did the market make a low there? Mm, Again, not trying to curb fit anything. We just want to find did the market make a low there? Let's see. Um, Stretch this out here. All right. You see that we have a level of support. We got U-turn, U-turn. We got U-turn here. We got support, 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 and more support. And then you see the market taking off. So it's safe to say that here is a low price. Okay. So now we come back to see if we can find, we're going to make this, take this angle, and we're going to clone it. And to see if there is any type of symmetrical movement in the market right there where we got resistance. So as you can see, we had resistance. We had a level of resistance. That angle is kind of janky, but I mean, you still got the market reacting off of this channel. So you got resistance here. I mean, you got support here, and the market broke above it, backside, support, support. But then we fell down and we had this level of support. Then the market came back and tested that same angle that was holding support, resistance. So, and then you see the market just kind of come along and just hung around this angle, this price point, 1, 2, 3, 4, 5, 6, 7 days before it decided to take off. So a whole 7 days, 7 trading days, the market just hung around this angle. So safe to say that this was a known level of U-turn at the top. So in order to trade this, right? So the market is too high. Um, Matter of fact, let's go get that monthly time frame price point and let's bring it to the 1 hour time frame. I mean to the daily time frame. So let's bring that over. Remember that price point is 186, 186.768. So here's our monthly target. So that is the target we're trying to shoot for, right? Now, in order for us to trade this, we're going to need the market to come. We're going to basically need U-turn. We're going to need a U-turn. We need the market to come down. Now, let's see, do we have horizontal resistance? Or will we have a horizontal support level? Now, this could be, so this was horizontal resistance. You have resistance here, resistance there. And I mean, could this market actually come back down to this level? But if it was to come back down to this level, we will be back into this channel. So we could, all right, so what we need the market to do. So right now, the market could just take off right now. Market should just take off and it can just go all the way to that price point. But if the market does that, then there's no trade. So what we need the market to do, we need the market to make lower highs and lower lows, coming down, back, coming back down to this non-level U-turn to the backside of this, what was keeping the market down, keeping the market down, come back and test it as support again, then we start buying the market there. So that's where we buy the market. We can either buy the market here or let the market or the market can fall below here back into this angle, test the backside, let the market fall all the way back down here. Boom. Then we buy the market right there at known levels of U-turn. So right now, price is too high. We're not looking we're not looking to buy this market just yet because if we buy the market, understand that this market could eventually U-turn on you and fall all the way back down to a non-level U-turn. So if you buy the market now, you are subjecting yourself that you can this market could fall down back to non-level U-turn, which could possibly be this angle or it could be past resistance, this black line, horizontal resistance, past resistance becoming future support, which really it already did that. It came future resistance and future support here. The market took off. So in hopes this market could give us a low price. I don't really know. Again, we're just waiting for the market. We'll let the market tell us what it wants to do. And you see, this also been keeping the market. This angle has been keeping the market up. If the market breaks that angle, it's a good sign that we could be coming down to a low price. But right now, the market is too high. Buy high price, low prices, daily time frame. So there will be no trade on this market. Not chasing it. That is a recipe for you to experience a lot of drawdown. So, but we're still gonna go to the 1 hour time frame. Now, the 1 hour time frame is our entry chart, and we use the 1 hour time frame, separate the market into buy zone and sell zone, and we use the same strategies. We use support resistance, and we bring in our trend lines, and we use Fibonacci's. We use Fibonacci's to find known levels of U-turn, but we not necessarily use Fibonacci's on the 1 hour time frame because Fibonacci's on the higher time frames work better the higher the time frame is. And matter of fact, if we did bring Fibonacci's in on the daily time frame, we come back to the daily time frame, we got a proper low here, and then we have a proper high there. Then look, see how that Fibonacci is literally the resistance level. The market hit that resistance and then it fell out. So past resistance, resistance, then the market falls off. So the deepest retracement, we bring our next Fibonacci in to the deepest retracement, which is here. Bingo. We got a point 0.50 retracement, and we got a Fibonacci extension just taken out right here. And that happened yesterday, looks like. Yep. So basically this Fibonacci extension was hit yesterday. So that's a good sign that like once this Fibonacci hit, we had got 1, 2, 3 days of retracement. But then the market came back down to this non-level U-turn, kept going back up. So again, you see, this market could come back down here. We can give us a low price here. And then if we can get a low price here, then we can bring in the counter trend line. If the market wants to hold this angle as support and then go up again, then this could possibly be a low price here. So if the market could come back down to this angle, we can probably buy the market here, if that makes sense. So if the market could come here and then go up, then we can sell, or then we can buy the break at non-level U-turn there. So yeah, all right. So we can get rid of the Fibonacci's. So those just hit. All right, safe to say. All right, we just hit a Fibonacci yesterday. Market is still going up, going to make a proper high. You know what I'm saying? If you buy the market now, you could be putting yourself at risk for drawdown. And right now, if the market was to reverse, could possibly fall down 500 so pips. You can be 500 so pips in drawdown. So we just had a Fibonacci. So daily time frame, waiting on the market. We gotta wait. We have to wait for the market to give us a low price. Market gives us a low price, and it holds at this angle. We will buy it because we already held at the backside of this channel at support. Market taking off. Got what sees the we got another angle of support here inside of the channel when we broke above the channel, and this could be a new level of support. And matter of fact, that this might just be a whole new angle. Got high here. So we got these touches here. See what I'm saying? We got this high here. Let's make that blue. Thicken it up a little bit. See how we got another smaller channel inside this bigger channel with resistance, support, resistance, support, support. Might be resistance right now going up in that direction. So, all right, we just waiting on low prices. But okay, we go to the 1 hour time frame. We use the same strategies on the daily and on the monthly and the daily. But monthly is direction. Daily is high prices and low prices. And now we want to separate the market into buy zone and sell zones. And we ask ourselves the same question, current price point. Why did the market just come and make a low here? The most major low, and the market just goes up. So why did we make a low here? And we're not curve fitting the trend line. We just want to see where we get the most touches. We may need, I think that's the most information we can bring in on a 1 hour time frame. So from that low, you got U-turn, 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 U-turn. In fact, if we bring it down there, we got a false break. And let's stretch it out. Bingo. So this is, so here we go. We got buy zone, sell zone. Here's buy zone. So we got buy zone. And then here's our sell zone. Okay, so every time the market comes to this blue line, goes up. Come here, U-turn, U-turn. We got a false break, U-turn, U-turn. We get a touch, holds the market up. Then the market never actually came back down. But as you can see, when the market gets to this U-turn, it gets to this blue line or this blue angle, goes up. So our strategy that once we get to a known level of U-turn, because the market's U-turn at, on, or around the same price points. Matter of fact, let's see. I'm look like I'm seeing something else. What's that now? Or what about this low? These lows? Mm, nah, cause see that would be, yeah, that would be trying to curve fit the trend line. Let's see, we got that. Market comes up. I mean, the market goes up, then the market comes down to a known level U-turn. Got U-turn there, U-turn here, U-turn here, one there, one here, and one here. And then we have U-turn there. So every time, so the market likes to U-turn at, on, or around the same price points. So we got U-turn one, two, three, four, five, six, 7 times the market came down to this line and then it goes up. So kind of we buy low in the buy zone in the direction of the monthly time frame. So we bring in our I'm tripping. All right, I got it. So market comes down, hits the trend line, bring in our counter trend line. We bought the market here. Market goes in your favor. All right. We come back, we get a touch here, we bring in our trend line, bring in our counter trend line, break the market, market goes up. We break this trend line, market goes up. All right. We get another touch here, bring in the counter trend line. We buy the market in the buy zone off of counter trend line breaks. We would have bought the market here. Yeah, we might have had some retracement. Our stops would have been below this low in the sell zone. Market goes in your favor. Market goes in your favor. You would have bought the market here at the close of this candlestick above that counter trend line. You only would have had 60 pips of drawdown, but then you would have had 400 pips of profit. And then you only would have been in drawdown for a couple of hours. And then for the next 1, 2, 3 days, you were just in profit. And your stops never got hit because your stops would have been low here. Then we come back, the market U-turns at, on, or around the same price points. So we would have had a counter trend line. We had a counter trend line here. We get a counter trend line break here. So you buy the market this at that candlestick. Buy the market would have bought the market here. You see, you only would have had again 50 pips to draw down, but then look how much profit. 509 pips. So you see when we buy at known levels of U-turn, if we buy low prices in the buy zone, in the direction of the monthly time frame, counter trend line breaks on the 1 hour time frame. This is a strategy for success. Same here. Counter trend line break. Counter trend line break bullish at a known level of U-turn. Buy the market at the close of this candlestick. You never even had drawdown on this one. The market just went in your favor immediately. And again, market went up how many pips from here? Close of this candlestick, 857 pips. So you can see it. Now, not necessarily you would have got all of those pips because according to strategy, if we want to bring in, okay, we just find the major high and we bring in a top, find the level of resistance, just draw back. We got those touches. Let's see how we got. Could be at a known level of U-turn right now. So, but came from this high, we drew back. When we got all the touches, we got resistance, 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 resistance. Hold up. Make sure we see it. See, we got resistance here, resistance there, resistance here, resistance there. All these U-turns. Well, could be possibly at another known level of U-turn right now, even on the 1 hour time frame. So now we got a channel on the 1 hour time frame. If you would have bought the market here, waited for the market to went up, uh, what was this? Bought the market this counter trend line, went up, took your profits, 270 pips. Came back down, counter trend line break, bought the market up to a known level U-turn, 406 pips. Counter trend line break here, 500 pips. Counter, oh, we even missed this counter trend line break. Counter trend line break. Bottom market here. Stops in the sell zone. All the way up to the top. That was 1,327 ticks. If we would have bought it up and at that price point. If you would have bought it back here and just held it and put your stops in the sell zone, you never would have got stopped out because this low we would have had our stops below. This low back here in the sell zone. Stops would have been here. Stop would have been right there in the sell zone. And we just sit there and waited because we were trading in the direction of the monthly time frame at a low price on the daily. We're trading. We bought a counter trend line break on the 1 hour time frame in the buy zone at a low price on the daily time frame in the direction of the monthly time frame. So right now, we're just waiting. So just get all of this off of here. Just showing you that back if we would have been trading and noticed this channel, say here last month, 500 pips. That's like a total of 1,800 pips just on the way up to that Fibonacci extension that we drew up on the daily time frame because we had our low prices. This would have been our low price, low price, low price, known levels of U-turn. So as long as the market was going up here, we would have never been, we still would have been buying the market. We either would have bought the market here, a known level of U-turn, the market's coming up, we would have stopped the buying here, and then we would have drew our trend line here, or we would have waited for the market to break above here, which it did there, tested the backside of this angle of support, of resistance and support, and it took off. So, all right, that's the British pound, Japanese yen. Let's get rid of all of this stuff. Just make the charts a little more cleaner. Oh no, that's the, yeah, we can get rid of this too. Just clean the charts up a little bit. All right. Just keep the counter trend line breaks on there every time we get a touch. So that would be the strategy. That's what we're waiting for. Counter trend line break. All right. So we're just waiting on this market to give us a low price. If the market come down, give us a low price here. We bring a counter. We'll do the same thing as the market is done in the past. Bring in a counter trend line break, and we'll buy the market up to that extension. Again, what's that price point? It's 186,786. So we'll bring that price point on the 1 hour time frame. And again, 186, 186 point, right? Hold up. 186.768. All right. 186.768. 1 hour time frame. So that's our this our monthly target. Just waiting on us to get a low price. And it could possibly happen within this channel. You never know. We just wait to see what the market want to tell. We'll let the market tell us what it wants to do. But we're just gonna monitor that. All right, that is the British pound and the Japanese yen. We can save this. Let's rename it. GBP JPY. You know what? Let's capitalize all of it. GBP JPY. All right, say that. All right, that's the analysis done. This is another strategy that I am currently testing. Uh, these purple lines, purple circles, or this line here, what they call the destination trader, it's an indicator. And then you have these green, you have this blue, green, blue and two greens and look like a red, these red lines, that's tunnel trader. So I've been testing these. This is normally used for futures because futures is more volatile than Forex. So these these trades that go off here, we traded green to blue, but on Forex, it's 5 minute time frame, this green level to this blue level. I mean, yeah, green to blue level. So that only gets you 33 pips. But futures is more like 80, 100. So, but I mean, this still works on Forex. I'm thinking about using this as like a scalping type strategy to get like 10, 20 pips real quick, get in and out the market, just so I can, start having more trades because this trading style that I have now is kind of on the slow side. It does take a couple of weeks, or sometimes it take a whole month for a trade to happen, just like with the Euro USD. Like I said, we look at that real quick. Euro USD came through. Like I said, we monthly time frame. We said that, we had this down channel. The market broke above resistance, and we looking to buy this market up at 1,374 pips to the monthly Fibonacci extension. Then we came down to the daily time frame. Now, basically, I watched this market as it was up here, waiting for it to come down and give me a low price. Now, I didn't buy the market, but you can see I waited since the 8th of May. So the 8th of May, we just sat here and watched the market fall all these days. And I did go back to find maybe that the market would find a angle of support there, which it actually did, and I didn't buy it because I was waiting for this market to retrace down to this overall blue angle of support, because that's what was holding the market up support May of last year. So this was a last year low, and the market never just came down to this low, and it looked like it's going back up. So look like it's going back up to that known level U-turn, which is the top of this angle as resistance. But we did 265 pips, and then even on the 1 hour time frame again. But that's why I was saying, this trading style is kind of on the slow side, but it even worked here. We had our 1 hour time frame. We separated in the buy zone, sell zone. See how the market came here, and we just U-turn, support, resistance, resistance. Then we broke into the buy zone. The market literally came back down to test the backside of what was resistance as support in the buy zone, and then a counter trend line break there, counter trend line break here. We would have bought the market there, so um, we would have had some drawdown because we would have bought the market here, but we only would have had drawdown 45 pips, but we would have been only negative until we got here. Well, then we got negative again. So we probably been negative about a day or so. But eventually the market just takes off in your market would have took off in your favor about 240, about 250 pips or so. But yeah, strategy still worked even on that, but I just didn't buy it because I was waiting for the low price here at that non-level U-turn. But this strategy normally takes about 2 or 3 weeks to happen, and I'm looking to trade. I'm looking to hold trades for a long period of time. So, but I have been messing with this destination and this tunnel trader to see if I could, sometimes get me about 20, 30 pips real quick, then be in the market maybe an hour, 2 hours, and then get out, just kind of becoming like a little daily scalping strategy. But enough of that. So, all right. So that was the GBP JPY. All right, let's go and save that. Now, how long? Been live? Oh, 45 minutes. All right, let's go ahead and break down this. Let's break down the British pound and the Swiss franc. And after we do that, take me about a 15-minute break just to reset myself and get myself back right so we get back in the charts. All right. So again, us as traders, we have to know that the market does not move randomly and that the market moves at known levels of U-turn and that the market moves at known levels of U-turn and that it moves symmetrically, that the market is not random. So when we come to the monthly time frame, we see that we need to use the monthly time frame for direction. And we find direction using trend lines, support and resistance, and Fibonacci's. That's what we do to find our direction and to find known levels of U-turn. So we come to this market. Obviously, we can see that this is a bearish market. The bears have been in control since basically the creation of this back in 2002 or where this chart begins. But we come to the current price point and we ask ourselves, why did the market make a high here and just reverse? Excuse me. So we bring the trend line. So we come here, we bring our trend line, start our trend line here, and then we just bring it back. And we just want to ask ourselves, why is the market just come U-turn right there? And we're not trying to curb fit anything. We just want to see, is the market making U-turns at known levels? What the U-turns are at? What is the market trying to tell us? And then we bring it on down. And we can see that the bears are in control of this market. As you can see, we have resistance. October of 2010, a whole decade, over a decade, this market, this angle. We had some breakage, but see, we never held support, and then it broke back down below it, and then it just kind of played around here. Then it did hold support, which we probably would have tried to look to buy back then, but that was 2015. Then it broke back below it, tested the backside, resistance again, it falls. Resistance, falling. Resistance, fall. Resistance, resistance. Market's falling. Okay. So we found us a level of resistance in this bear market. We take this trend line and then let's clone it to see if we have a bottom. Mm, we may need to draw this one, but actually, look, kind of like this one. You see, we got U-turn here, then we got U-turns there, and it looked like we had side with horizontal support here. So you had months where the market was just in consolidation. Then we come back down, U-turn, U-turn, U-turn. But I want to try my hand at drawing this one. So current price point, why did the market make a low here? And let's just go backwards. Again, kind of the same angle that we had put up before, the cloned one. Got support here, support there, breaks it, comes back up, support, then horizontals. We came down to this non-level U-turn. Market broke below it, but then came right back up into some consolidation, went back up to the top, support, support. Bingo. I like this one. We didn't force feed it. We just let the market tell us what it was. So we got U-turn there, support here, support there. All that horizontal support. Then you have support here, and then we have support there. All right. So now we have our support level. We have support levels and we have resistance levels. All right. So in order to get the direction, we have a known level. We have hit a known level of U-turn at support. And in the past, when we hit this mark, we hit support, the market goes up to resistance. The market hits support, goes up to resistance. Hit support, goes up to resistance. Support, up to resistance. So we are safe to say that this market is traveling up to a known level of U-turn at resistance. So we let's bring in that price range tool, current price point now. This market could go up 832 pips. So we're looking to trade up to a known level of U-turn at resistance. And then once we get to the resistance level, then we can wait and start looking to start trading back down to this known level of U-turn at support. But right now, we're going to say that our monthly direction is bullish, is going up. So we're looking to buy this market up to resistance. So let's type that out. Monthly time frame. Wait. All right, monthly time frame. U-turned at known level of U-turn at support, and now traveling to resistance, looking to buy this market up to monthly resistance 850 pips away. 850 pips away. All right, that's what we're looking for. And matter of fact, we can bring in a Fibonacci. We can bring in Fibonacci to kind of gauge how far the market might go up from the low of 1-2 candlesticks to the left, 1-2 candlesticks to the right, lower, that's higher than center wick low. And then we need 1-2 candlesticks to the left, 1-2 candlesticks to the left. Okay, 1-2 candlesticks to the right. That is lower than center wick low. So we can bring in a Fibonacci right here from this low to this high. And as you can see, we got a Fibonacci extension. Market just held 5 months at that 382 extension. Fibonacci extension, price point, that price point is what? Price point 1.2, all right, 1.23969, 1.23969. All right, that's 618 extension, which is the exact same level as resistance. So 618 extension level, the same level as that resistance point. So it's a safe sign that we could be getting ready to break out of what's being looking like consolidation. If we look at this, see how we got that high, and then we got these lows. Yeah. So market could travel up 832 pips, but now that I'm seeing this, we got these lows. But long as we got these lows, we're still looking to buy this market. But we do need the market to break above this high of resistance, which look like consolidation range, which could possibly be now, because you got these highs, 1, 2, 3 months of highs. Look like we could be breaking these 3 months of highs and 3 months of lows, consolidation. Market could possibly be breaking it now, but okay, direction is up. We're looking to buy this market. So British pound, Swiss franc, we typed it up already. We hit a known level of U-turn down here, support. Waiting for the market to travel up to hit resistance on a monthly time frame. We have an up Fibonacci that is 1.23969. That is the same level of resistance in the past in the overall down channel. So monthly time frame, we're looking to buy this market. So again, we go to the daily time frame. The daily time frame is known for high and low prices, and we use the daily time frame. We use the daily time frame for highs and low prices, and we find our high and low prices using the same strategies that we do on the monthly. We look for U-turns using trend lines, support and resistance, and Fibonacci extensions. So we can come here and we can ask ourselves, so why? Mm, let's bring in some more candlesticks. We bring in more candlesticks and come back and we ask ourselves, right? So current price point. Why did the market make a low here? Which you can already see all of the horizontal resistance, the horizontal and the horizontal resistance and support. But why did the market just come and make a low here? Mm, well, kind of too much information. Let me see. Is there an angle? Because right now we just kind of in this market just kind of in consolidation right now. Current price point. Where is the most major U-turn level? You see, we are in consolidation though. I mean, this one gonna be kind of tricky just because of the consolidation ranges. Okay, just trying to see if I can find the bottom. Okay, the most major low right here. If we go back, just want to see what we get the touches. U-turn, U-turn, U-turn. This is our job. We must come in and find known levels of U-turn. Okay. That looks good. Mm, but that's a lot of movement though. 'Cause if we come in and we ask ourselves, why did the market make a high here? You see, we got touch, 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 touch. Then we can bring this out. Mm. But it's taking, it's too wide of an angle. It's taking a long time for the market to move. But this is April of 2021 for it to fall down here. So, okay, let's get rid of that. We brought in, might be a little too much. We're just trying to gauge where the high prices and low prices are. All right, daily time frame again. Let's do it again. Current price point. Why did the market make a low here? Okay, we zoom in on this portion of the down of the daily time frame. You can see it. Well, you can see that consolidation on the monthly time frame. There it is. You see how we got U-turn? See how we got support, 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 and support. All right. Now we're gonna ask ourselves current price point. Why did the market make a high here? So why did the market just make a high here and U-turn? And you should be able to see it. Look, even right there. There's a consolidation. There's consolidation. Had support here. I mean, had resistance there, resistance here, resistance, resistance, resistance. Currently going up to resistance. Okay, so now daily time frame. Fibonacci's don't necessarily work in consolidation. You need to have a bullish trending market where the market is going up and the market going down. Um, let's see, maybe we do have a floor support, and we have a ceiling of resistance. Um, if we brought in a Fibonacci here from this low to that high, I mean, what would it be? So this Fibonacci, okay, so from this low to that high, we have a retracement of 236. But now this market has never been able to break above the 2-7 retrace or 2-7 extension because again, we have consolidation. The market entered consolidation right here. So uh to trade this, because we are still looking to buy it, we just watch the angles. So we see that we have support down here and we have resistance up there. So either in order to buy it, we need the market to break above this angle. Hold on, let's give them 3 pixels. Let's do this. So you see we need the market to break above resistance, test the backside of past resistance, becoming future support, and then we wait for the break and we start buying the market. Then we buy the market right there. We buy the market at that known level U-turn at support on the backside of what used to be resistance, holding the market down, or we wait for the market to fall down. We want the market to fall down back to support, then give us the break there, and then we buy it there. Then we buy it here. Cool. All right. So daily time frame. I said daily time frame. That's that consolidation that we're seeing on a monthly time frame. We got resistance, and then we have support. But we do have an up Fibonacci. Not necessarily looking to trade up to this Fibonacci price point on the daily time frame until the daily Fibonacci price point is well, that's 1.19758. All right, that's daily Fibonacci extension, which again, that's October of last year. That Fibonacci. If I want to trade it up to that price point, we would have to break above this, break out of consolidation, give us a retest on the backside of support from the consolidation, and then we start buying up. Because then we should have an angle. We should have a support, and then we should have a bottom of support and a floor. I mean, a floor of support and a ceiling of resistance and an angle going up. to that extension. But long as we're in consolidation, we're just going to trade from support, low prices in, we're going to trade low prices in the direction of the monthly time frame. So this is our low prices. We're waiting to get low prices and inside of consolidation, and we'll trade it up to the top, or we'll go to the 618 extension on the Fibonacci once we can break above resistance, test the backside of support, and then get a counter trend line break going bullish in the direction of the monthly time frame up to the 1618, the extension. So as of now, we got a consolidation range that's from the bottom of support to the top of resistance, 444 pips, bottom of support, bottom of support, top of resistance, which could be about that's another 499 pips, close 500 pips. So long as the market is not breaking below support, we can buy this up to a known level U-turn of resistance in the consolidation. So we're not selling it, we're looking to buy it. So you see, we come here, we buy it up here, buy it again, buy it again, buy it again, buy it again. So we're just waiting on the market to give us a low price, known level U-turn. So all right, that's highs and low prices. We got that consolidation range. I'm waiting on the market to break out. And 1 hour time frame, again, 1 hour time frame is for buy zone and sell zone. Not really much to really do here because this market is going up. We're waiting on this market to give us a low price at a known level U-turn on the daily time frame, looking to buy it in the direction of the monthly time frame. But we still come here and we separate the market into buy zone and sell zone. So current price point, why did the market make a low here? Let's go find out. See what the market want to tell us. Why did the market make a low here? Mm, let's make that 1 pixel. Make sure we're not curve fitting. Yep, you can see, should be able to see it. Wait, hold up. My fault. Let's start over. Let's do it again. Current price point, the most major low. Why did the market make a low here? Oh, matter of fact, yeah. So why did the market make a low here? Touches, draw it backwards. You see how we got those U-turn levels. All right. If we go to the daily time frame, yeah, again, the price is too high, so we're not buying it right now. We need the market to come back down, give us a low price, so we can buy it back up there for again 444, 440, 500 pips here. You know, so this is where we actually make our money in the consolidation in the direction of the monthly time frame. 1 hour time frame. All right, we have our buy zone, sell zone here. So we got buy zone, got buy zone, and then you got a sell zone. All right, there's a buy zone, sell zone. Market is currently going up. Matter of fact, let's see if we can bring in these horizontal. Let's see if we can bring in this consolidation ranges. So it looks like we got resistance here, and look like we got support here. All right, so we can bring in these price points, put them on the, oh, matter of fact, make them black. Don't want to be confusing with the extensions for the Fibonacci. All right, see how we got support and we got resistance. And so we got a 1 hour time frame. We have a floor support. Oh no, I don't trip. I was literally gonna say, wait, hold on, did I go right to it? All right, we got a floor support at 1.0. Oh no, 1.10436. 436. All right, so that is the floor support on the daily time frame. And then we have a ceiling of resistance at 1.15280. And we got a ceiling of resistance on the daily time frame. Okay, so we got that on the 1 hour time frame. You see on the 1 hour time frame, the daily time frame traveling up to resistance. You see how we have um see how we have this, we got the support angle where the market is actually channeling up, making higher highs, higher lows, and making going up, making higher highs. We have a high higher than that high, low higher than this low. Now we got going up, making a high higher than this high. See? So we got the market making higher highs and higher lows, going up to the daily resistance. So, and we have a buy zone, sell zone on the day on the 1 hour time frame. Counter trend line breaks bullish. We have a touch here. We bring in our counter trend line. We would have bought in our counter trend line here. So once we got the touch here, we'd have bought our counter trend line in. Then we got a counter trend line break here. Market goes up. Boom, we got another touch. Bring in our counter trend line. Bingo. Another touch. Bring in your counter trend line. Bingo. And right now we haven't got another touch yet. So, but that would be the strategy of how we would get into the market in the buy zone, buying counter trend line breaks in the buy zone, in the direction of the monthly time frame at known level, at a low price on the daily time frame. So that is the British pound and the Swiss franc. So again, recap on this one real quick. I said we touched the known level U-turn at support, waiting for the market to go up, but we found some consolidation range the last couple of months. So until we can break out of that consolidation range and get low prices, or get a low price at support outside above resistance and consolidation, then we'll start looking to buy it on up. But as of now, we're just waiting on a low price at a known level of U-turn, waiting for the market to give us a low price down here, and then we can just buy it back to the top of resistance until we break out of resistance bullish, get a retest at the backside, then we can buy it up to the daily fib in the direction of the monthly Fibonacci target, which is 12396. So see how the charts are starting to line up with each other. So 1 hour time frame, then we come to the 1 hour time frame. Basically what we're looking to do, because the market is too high right now. So if the market came down, we could be subjecting ourselves to the market breaking this uptrend line. For the market to come down, the waves down, come up, probably stay here, then break into the sell zone, come back, give us a retest in the sell zone, what was support as resistance, then start making lower lows, and higher lows and lower lows down, making a new downtrend back down to the known level U-turn at support. So we're just kind of monitoring this right now. I mean, if the market does come down and it holds at support, and we did, just to say we did buy it because we are U-turning at a known level U-turn on the buys on the daily time frame. Still got what 50 so ticks, pips or ticks, that's futures. But if the market was to fall down, U-turn at support, and we get a counter trend line break, then we could probably squeeze 100 or so pips out of it. But right now, price is too high. That's what we're waiting on. So we're just waiting to get them. We're waiting to either the market to fall down so we can buy it there. Hold up, get rid of this. Waiting for the market to fall down. Wave up, wave down. Give us a touch here, give us a touch there. Then come up, start waving up again. And then we'll have the counter, we'll have the sell zone, the market breaking the sell zone, breaking up into the buy zone at a known level of U-turn at support. Then we'll start buying counter trend line breaks in the buy zone once we can get that low price. Or we'll wait for the market to break up above resistance, test the backside, support, and we just start buying it. We keep buying it up, and we just buy it there. All right, again, I say, see how we just have to have patience in order to wait for the market to give us the price points at known levels of U-turn where we can look to start buying, because even you can see here, you can see how we if we go in the past and we see when the market, you see we have the downtrend angle. The 1 hour time frame is making a downtrend of February, uh so February 28th to March 13th. So it basically took 2 weeks for the market to fall from this high, to fall from this high all the way down. And you can see how we have the U-turns here. So this would, back then, if the market touched here, this would have had been the sell zone. So it took 2 weeks for the market to fall from this high back down to this low. Then you see we broke into the buy zone, tested the backside. We broke resistance into the buy zone, tested the backside of what used to be resistance holding the market down at support, and would have bought the market on a counter trend line break bullish. So we would have had a counter trend line break bullish here. No, actually, yeah, actually we would have got it here. So we would have bought the market here, and you only had 24 pips to draw down, and market goes in your favor. First day, again, market U-turns, U-turns, and then it just goes all the way up, goes up. So yeah, it's kind of tricky, but that's what we're waiting for. And then once we broke into the buy zone, you can kind of see where we had, a new buy zone, sell zone that formed right after. See how we had U-turn, U-turn, and then even on the backside of this trend line, see, broke into the buy zone, boom. So then now we would have had a new buy zone, sell zone. Then the market broke into the sell zone, tested the backside, and then like just kind of went sideways. Then just fell back down. So, all right, that's just me fooling around, giving you the idea, giving myself the idea of, why exactly this is what we use on the 1 hour time frame. Buy zone, sell zones, just waiting. Just waiting, just waiting, just waiting. All right. So that is the British pound, the Swiss franc. Let's go ahead and save this. Rename it first. Rename it GBP, GBP, Swiss franc. All right. So we got the British pound, Japanese yen, British pound, Swiss franc done. Gonna take a 15, quick 15, then I'm gonna come back and we're going to go ahead and jump into this British pound and the Australian dollar. We're gonna move up into this one. Just take a quick look, see what they look like. We'll come back, use our monthly time frame for direction. Remember, we're looking for U-turns. On the monthly time frame, we use support resistance, trend lines, Fibonacci's, gauge direction of this chart of where we're gonna go and what we're going to look to buy or sell for the long term, find our U-turn levels, using support resistance and trend lines. So, all right, we're going to come back, do the GBP AUD, but take me about a 15-minute real quick. Should have had this set up already. That's right. I need to do the one that's no copyright. So I want to get my video struck down because I use one of their stuff. All right, 15 minutes. I'll be right back. right, I'm back. Yeah, had to do a quick little reset. All right, we've been live an hour and 40 minutes. Okay, let's go ahead and let's go through the British pound and the AUD, and we'll still have three more charts to go through, and then we'll try to do a quick recap, and then do a quick recap of what the trades that have already been going on and charts I've already been looking at. So and then we'll call it. We'll call it there. Okay. All right. So again, we use the monthly time frame as direction. We use trend lines, support and resistance to find known levels of U-turn, and we bring in use Fibonacci's to find potential level of support and resistance. So, all right, we ask ourselves the question, go to current price point, right? And we come down to the most major low for the U-turn, and we start our trend lines here and we go backwards and we ask ourselves, okay, so why did the market make a low here? And again, we're not trying to curve fit anything. We're not trying to force the market to tell us something that is not actually telling us. We just go back and we try to find known levels of U-turn. Bingo. You can see we got a level of support. You see how we have a level of support here. We got resistance in the past, and then we have support. So to see that, just to make it more clearer, we got support here, support there, support here. Then the market came down, tested support there, came down to the support level, and then shot right back up. So, um, and then in the past, this same angle was resistance. Resistance held the market down, held the market down. Okay. So now we have a level of support. Now, vice versa, we need to have a level of resistance. And then we go to current price point and we ask ourselves, so why did the market just come make a high here and then the market just fell off? So we come back, draw trend lines across. Like we got a few touches there. Like we got some touches there. So we got a touch. We got touch. Support. Resistance. Okay. But what looks like, wait a minute. I'm gonna keep that one, but let's clone this one and see if we have another level of resistance. Well, no, actually, dang, that looks like a level of another level of support resistance. Another level of support. You see how we got these touches? Support. Then the market just hung around that support, broke through, came back, tested support, and then now going up. Hmm. So it looks like we have multiple levels of support and resistance. And it looks like we have a down angle. Even if we bought the market here, that looks like another level of horizontal resistance. Hmm. Looks like we got three angles. Like we got three horizontal levels. Look like this market is moving in consolidation. It's just kind of shifted and then just kind of moving up and down in waves. just not really making a clear up channel and a clear down channel. Like the market just going up. Like this market consolidation for a few months, about a year or so, then start trending up, but then went up, but then found a new level of support and resistance, consolidation, but then trended up, but then now fell back down, support, now trending up, resistance, fell down, support, we broke below support, tested resistance, fell down to this lower level of support. Then the market came back up above it, resistance, tested support again, which it looks like we're now at that level of resistance again. Okay, so as you can see in the past, this market has been U-turning. So it looks like we have us a ceiling of resistance. We got resistance there. Market broke through, then came right back down. We closed above it, went up, then the market came down. Got support. We had resistance here, resistance there, and looks like we might have resistance here. And then vice versa on the opposite side of this one, we had our support. Then the market came back up, and now we got support here. What used to be past resistance, future support, support there, and there, and there. All right, safe to say that even if we bring in a Fibonacci and we go to this 1-2 candlesticks to the left, higher than 1-2 candlesticks to the left, 1-2 to the right, lower, higher than center wick low, and then we got 1-2 to the left, 1-2 to the right. That's lower than this center wick high. So we can spread a Fibonacci here, boom, and then bring in, and what's that price point on that Fibonacci? That price point is 1.9, 1.97199. All right, 197,199. All right, the Fibonacci extension. I mean, in the past, when we go back in the past to see if that would be a good target for the market to go to, and you can see right in the most recent past, you got that being a resistance level, support level. So the market likes to travel to known levels of U-turn. Uh, but right now, we are currently, that price point is, how many pips is that price point above this resistance? So above this resistance, that price point is about 500 pips. So in order for us to be able to go to this monthly fib, we need the market again to break above what has been keeping the market down. So you see this market been staying down at this angle. So in order for us to be looking to buy the market, we need the market to close above resistance to be able to go up to the Fibonacci extension. But again, this market's been going up 1, 2, 3, 4 months. This market has been traveling up. British pound, Australian dollar been going up 4 months. This market could be in exhaustion because the market just been going up 4 months, almost 2,000 pips. Market almost went up 2,000 pips. So, um, direction. In order for us to be continuing to look to buy, we need the market to close above resistance. All the buying could be over because we did hit support and the market went straight up to resistance. And right now, the current candlestick is pulling back from that known level of U-turn, that resistance. So monthly direction, current price points back down to support 1,281 pips away. So in the past, once the market hit here, we started retracing down. And then here we are again. We can be looking to go back down south to a non-level U-turn. And if we bring in the trend line, kind of gauge what's been going on with these lows. All right. You see the market breaks that trend line from that low. I'm saying from this low, then probably could be making another low. If the market breaks close below that, it's definitely a good sign to sell. But right now, since we hit a non-level U-turn of resistance, we are looking to sell this market. So let's type that up. Monthly time frame. Okay, we're saying that the monthly time frame. Okay, that's why I kept doing it. I had my caps lock on. So the monthly time frame hitting resistance, U-turning bearish. So I am I am looking to sell this market down. How many pips? 1,000 1,285 pips. All right. So monthly time frame hitting resistance, U-turning bearish. So I'm looking to sell this market down 1,285 pips down to a known level of U-turn to support. Uh-oh. Let's bring that back up. All right. So monthly time frame, we're not looking to buy until we can close above resistance. So since this market is already retracing, it's starting a pullback from a known level U-turn of resistance in the past. So we're looking to sell this market. So long as we're not above resistance, we're not looking to buy. We're thinking that the buying is over. We have been going up for the last 4 months, and this market has traveled up almost 2,000 pips, going to the north from support all the way up to resistance. So we're just looking to trade this market down, back down to support. So, and at current price point, that is 1,281 pips of opportunity. So we take this information and we go down to the daily time frame. And again, the daily time frame is used for buy high and low prices. So we're looking to find the U-turns, and we need to find U-turns by using the same strategies we did on the monthly. We need to use Fibonacci's, support and resistance, and we need to use our trend lines. And we do so by coming to current price point and going back to the major low, finding out and going backwards, current price point, and find out why the market is making lows here. Current price point, we'll go back to the major low, and why did the market make a low there? Okay, so why did the market make a low here? And then U-turn. We'll just bring our trend lines up and we go back and we try to see exactly what the market wants to tell us. I mean, okay. So from that price point, you can see where the market had U-turn, 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 U-turn. So every time the market is above it, we come below it. It goes up, goes up. Market breaks below it, comes down, falls off. But then when we break back above it, this angle holding the market up. And which would be right now the market holding, the market breaking below it and never closing above it. Okay, so now we come back to the current price point. Ask, why did the market make a high here? So why did the market make a high there? Bring our trend lines up here and just go back. Try to connect the touches. And you can see how clean that is. All right. See how we have a bottom. Or see how we have a bottom and we have a top. So we have a floor support. You see how we got support here, support there, support, U-turn, 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 broke below it, but now we got U-turn, 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 and U-turn there. And then also on the reverse side, we had support here. I mean, we have resistance there, resistance here, resistance, 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 and then we just hit resistance again. So now that we've hit resistance and which looks like the market is below, we hit a non-level U-turn. Market traveled down south already in this angle. Market then out from top to bottom, the market traveled down 550 pips. So in order to trade this, let's just go over our so the direction is bearish. We're looking to sell this market. So we sell high, well, yeah, we sell high prices at known levels of U-turn. So according to this market, the market has the daily time frame, high price and low prices. Market already hit a known level of U-turn, right? So we hit a known level of U-turn. So we was either looking for the market to sell off here, which the market did, or was waiting for the market to break what was keeping the market up, break below it, give us a retest to the backside, which we currently are at right now. So the market closed below this angle, and we've been getting a retest, just retest for the last 4 days. We still have about an hour left on this candlestick. So we have 1, 2, 3, and even today, the market just hanging around this price point. So right now, since we broke this angle, we bring this trend line here. If we can get the market to close bearish below here, if we get the market to fall down bearish, the market can give us a close. If we can get a close below this angle, the market close bearish below this angle, that is the go-ahead sign to start selling because either because current price was here, we waited for the market to come up, which it has done, and then we would have sold there, or wait for the market to travel down, which it has done, break the uptrend break the uptrend channel, come to the backside of the uptrend channel as resistance, then we sell the market. So that's currently where the market is right now. So British pound AUD, we could possibly be at a sell. So all we need is for to get a daily candlestick close below this angle, which we have 1, 2, 3, 4, 5 days since the market broke below this angle, what was keeping the market up. This market has broken below that angle. So maybe since we do have a bunch of, so we did have this, we do have these candlesticks down here broke below. So we can come back and ask ourselves, why did the market make a low here? And see exactly what's going on. So we got touch there and just stretch it out. Oh no, I'm messing it up. All right, get rid of this. And let's bring this one back. All right, bingo. Okay, so we do have another channel. Well, it looks like, oh, we got another angle. We got a lower angle outside of this up channel, which the market has been respecting. We got U-turn here, U-turn, U-turn. Market support came back up, and then we was moving in this channel. So now, if the market can close, we can get a bearish candlestick below that angle because we are at the backside, been holding for 5 days. We get a bearish candlestick. We can get a bearish candlestick. This will be our first target. So first target, once we can get a bearish close below here, 510 pips. 510 pips down to what's been keeping the market up when we once we get below this angle. So we got a U-turn here. So you see how we got another level, U-turns. Just have to show you so you can see it. So it's more clear. You got U-turn, 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 U-turn. You see the market just never came below this angle. So that is safe to say that that could be another potential, the market shifting up this up channel, then the market shift back down in the lower channel, then shift back up into the upper channel, and then now currently could be getting ready to shift down to the lower channel, which we do have a Fibonacci which you do have a Fibonacci of 1, 2 candlesticks to the left, I mean 1, 2 to the right, 1, 2 to the left, lower than center wick high, and then we got 1, 2 to the left, right, 1, 2 to the left. That's higher than center wick low. So we can pull in the daily Fibonacci from that high to this low, and you can see that target, that 618 target, which is 1.86. Oh no, not true. So it's 1.81930. You see that possibly by the time the market falls down, by the time the market makes the waves, let's see here, get my trend lines going. So by the time the market can make the wave down, right? It breaks that, it's gonna go down, it's gonna come up, go down, that the market could possibly wave up and down, hitting that 618 extension at a known level of U-turn in the past, which is this support level in this lower channel. So, all right, that is exactly what we look to happen in the markets. The market came up and hit a known level of U-turn, like on a monthly time frame. So that would have been the high price to start selling because we're at resistance. We got the break. We would have sold it down here, got our pips, but now we are below what has been keeping the market up. We closed below it, and we're 1, 2, 3, 4, 4 days still below this candlestick. So this might happen within a few more days, Probably could be, it's the end. We are at the end of the trading week. And like I said, again, this is day number 4. This market just hanging around at that price point, at the backside of this up channel. So we looking for to get a break. Actually, um, let's put an alert here just to let us know. No, actually, we don't need to put alert. We put alerts on the 1 hour time frame that gives us the idea, that it's time to start selling. Okay, so now we take this information and we go to the 1 hour time frame. We have a down Fibonacci extension. We could be at a high price at the backside of what was support, now being resistance. That would be a high price on the daily time frame. And let's go to the 1 hour time frame. Let's first add in our daily time frame target, Fibonacci target. Again, that price point is 1.81930. 81930. Okay. And let's pull up the 1 hour time frame. So we currently could be at a high price on the daily time frame. There is our daily Fibonacci 618 extension target that we're looking for. And then, all right, so we bring in some candlesticks here and we ask ourselves, current price point, why did the market come up? So why has the market made a high here? Which, I mean, we already know, but let's see if we can find a higher. So why did the market make a high here and then just fall off? Let's see. Could it be this? Or could it be this? Actually, look, I actually kind of like this one better. But then we stretch that out. Bingo. All right, we see this. All right. So we go back. So now we have our buy zone, sell zone. We have a buy zone. So here's your buy zone. Here's your sell zone. All right. So at this angle, we can see we had resistance, broke up, tested the backside support, market goes up. Now we break down back down into the sell zone. We come back up, test the backside as resistance, fall off, U-turn, fall off. We have some, I guess, fundamental announcements. Just, we have those long indecision candlesticks with those long wicks up, but never closed above it, fell off. But now you can see the market kind of consolidating because we are at the backside of what used to be support, now holding at resistance. So as you can see in the 1 hour time frame, we need the market to break below into the sell zone. All right, we need this market to break into the sell zone. Probably going to come back, probably retest again, break into the sell zone, give us a retest to the backside of support as resistance, and then start selling down. Selling high prices in the sell zone off the daily time, selling high prices off the daily time frame in the sell zone on the 1 hour time frame in the direction of the monthly. Counter trend line breaks all the way down to the 618 extension. So wait for the market, break back down and wait for the market to wave, break down into this back into the sell zone, come back up at known level U-turn where what was support, that was support back here, break back below into the sell zone, come up, test as resistance, and we sell the market high price on the counter trend line break. Sell the market high price counter trend line break in the sell zone. Sell the high price counter trend line break in the sell zone all the way down until we get to that Fibonacci 618 extension. All right, so let's run back over this, run back over that real quick. We got the monthly time frame again. Monthly time frame looks like it's consolidation. We got sideways movement, so we got multiple levels of horizontal support and horizontal resistance. We got all the support here. Market broke here and stayed support. Broke below it, found that support level back here in the past in 2017. Broke back above resistance, held this upper level of resistance as support. Now we came to this, the outer level of resistance, and we've fallen. Now this market is falling. We do have a monthly upfield, but we're not buying it until we get confirmation that the market wants to continue to go up because the market has already exhausted itself over 2,000 pips for the last 4 months, and we're hitting resistance, and we're already getting a retracement. So we're looking to sell. Daily time frame, we had we had a up channel and a down channel. We have support on this lower channel and we have resistance in the lower channel. And the same resistance is now upper channel support. And we have resistance. We hit resistance, sailed off of the monthly resistance. We are now below the the, the upper channel and we're testing support as resistance right now. And we're waiting for the close of a bearish candlestick on the daily time frame inside. We're waiting for a bearish candlestick close below this angle, giving us the sign that it's time to sell the market down to this Fibonacci 618 D extension, in which would should be the same level as support in this lower channel. So we're currently at a high price, and then we go to our 1 hour time frame. 1 hour time frame says that the market broke into the buy zone, broke back into the sell zone, and we have a U-turn, a U-turn. We had a U-turn back here. Market broke back into the sell zone. Now we have a U-turn here. We have a U-turn there. We had two U-turns here. And then we're just waiting for the next U-turn in the sell zone. So once we can get that U-turn in the sell zone, counter trend line break, counter trend line break, counter trend line break. So we don't have a counter trend line break here because the market broke into the buy zone. So we need to wait for the market to break in the sell zone again, give us a retest to the backside of resistance, counter trend line break. All right, that is the trade plan for the British pound and the Australian dollar. So let's go and rename this. And we're going to name it exactly what it is, GBP AUD. And we're going to save that. All right, that is that. British pound and the Australian dollar, which is waiting for it to enter the sell zone. All right. So let's see if I can run through these real quick. We're live 2 hours and 15 minutes. Okay. Well, just go through, just do a quick recap on exactly the trade. Okay, this we go to this Euro NZD, right? So I just sold the Euro NZD again. Like I said, we won one trade and then we lost one. And now we've entered back into the selling again. As you can see, we have known levels of U-turn. We had angles going up. We had angles going down. Hold on, mama. I'm almost done. Yep, that's my cue to get out. Daughter just came in. So, okay, we got known levels of U-turn. We got high prices, and we got these low prices here. And you can see that we hit a level of resistance, and then the market is retracing off again. So We're looking to sell this market all the way down to what has been support in the past. That's 2,000 plus pips. So monthly time frame down, we go to the daily time frame. You can see we had a known level. We hit a known level resistance, a high price. We sold it, and we actually we had sold it, and we took our profits below below this angle inside of this up channel that was keeping market up. Then we sold it again because we broke below it, but I didn't wait to get the retest. You see the market closed below, and then it just kept falling. Never got the retest, and then the market went up, closed me, stopped me out. But then it went back. It decided to go back down. Oh, no, take that back. Take that back. The market closed below. We took our profits, and but then the market continued to sell off. Then the market came back up, gave us a retest. Well, it didn't retest, but it closed back up inside, and then I sold it and didn't wait for the retest. So now market. So we got stopped out at this big candlestick. We had some. I guess we had some fundamental announcement. The market just literally wiped us out, and then now looks like we have a new down channel that's coming on, and see how now we got support, support, resistance, resistance. So we sold it again because we hit a level of resistance here, and then we fell below the known level of U-turn, what had been keeping the market up past couple of months. And then now we actually broke below it. Now we got the retest. We got one, two, three, look like 1, 2, 3, 4 days of retesting this angle. The market just not being able. Soon as the bulls get it up here, the bears bring it back down. So that's letting me know, okay, let's try to sell this market again. Let's make the money back that we lost couple of weeks ago on this candlestick, which is May 24th. So again, we've been waiting. So about almost about 3 weeks, we've been waiting for this market to let us know exactly what it wanted to do. Now here we are below that angle again, retesting resistance, and now the market trying to sell off. So I'm just going to sell it down to known level U-turn in the past, uh, a known level U-turn in the past. We got U-turn support, support, support. If we can sell it down to support again, we can make probably over 530 plus pips. And you can see we just sold the market. Well, we sold the market, but we got this candlestick kind of indecision. But hopefully we can fall down here and get some of this money back because we still have a Fibonacci D extension. Market just came up, made a 618 retracement, and we got this 618 extension down here. So we're just waiting to see what the market gonna do. We placed our sell trades. We go to the 1 hour time frame. You can see after the market did all of that foolishness back here, you see how the market has stabilized, and now we have a down channel on the 1 hour time frame. Well, the market is basically in the sell zone, but we got a resistance, resistance, and then it comes down to we got a ceiling of resistance and a floor support. And then I kind of sold it early here because I was at work, got a little antsy. See, we drew it up. We needed the market to travel back up to known level of U-turn like we drew up in the past. And that's exactly what the market just did. This happened today. We sold it here yesterday because we had the market went up, we got U-turn there, and then the market stabilized again, went up, touched the known level of U-turn. So we sold the market again. We sold it right there. All right. So so we got we have two sell trades right now in the euro New Zealand dollar, and we're just waiting to see if this market can fall down. I think that's that 7016. Is that the 7016, is that the Fib? Okay, that's not the Fibonacci extension. That's just the bottom of this channel. The bottom of this new down channel, which can probably meet at the same price, the same angle as this one going up. So that's the information. We went, did our research. We seen where the market likes to U-turn, and we're just trading the U-turn. You see, this is where we have our stops. I got our stop losses up here, above in the buy zone, above the last previous touch, above the previous high, and we're going down for hit that target 70164. That is the target we're going for. We got the counter trend line break. Matter of fact, we had multiple. At this counter trend line break, then we had this one from that low. Once we broke back into the buy zone, back in the down channel, known level of U-turn. This is why we try to find those known levels of U-turn. Market literally came back up, touched it, and now we selling off. So, all right, with that being said, man, I am out of here. Let me go and wrap this up. Uh, again, man, just trying to stay consistent. I want this to be my main source of income. This is more so me just going live, recording my journey. We but about a month and a half in of me just going live, trying to stay consistent, man, make this money. We took some losses this week, so this last week and this week took a couple of losses. So I mean, it is what it is. Part of trading. We just lick our wounds, get back in the charts, man. Look for more trades, and we trust the strategy. Eventually, over time, we will make the money that we're looking for. So, all right, on that one, man, I'm out. YouTube, peace.